Hi everyone, welcome back to Corporate Decoder, the place where we decode the language of money and try to find out if companies are actually growing or just growing their debt. Today we're diving into Dave Inc., a company that's been making some interesting moves in the financial services world. They've just filed their Form 8K and it looks like they're tweaking their partnership with Coastal Community Bank. Let's see what this means for Dave and for you. So what exactly is a Form 8K? Think of it as a current report that companies file when something big happens, something that investors need to know about right away. It's like getting a news alert straight from the company itself. Dave Inc. is a company that offers a mobile app designed to help people manage their finances. They've been known for services like early access to paychecks and financial planning tools. They're trying to be a one-stop shop for everyday financial needs for a lot of us. This report tells us that Dave Inc. DIB stock already trades on the Nasdaq Stock Market LLC under the ticker symbol DAV. That puts them in the big leagues alongside lots of other well-known companies. Interestingly, their warrants, which are like options to buy stock in the future, also trade on the Nasdaq under DAVW. Now, here's something interesting. Dave Inc. is identifying itself as an emerging growth company. This means they're relatively new and can take advantage of certain regulations, particularly around financial reporting. They've opted out of the extended transition period for new accounting standards. This suggests they're moving forward quickly with adopting the latest financial rules, aiming to be fully compliant with newer standards sooner rather than later. The main news here is about a change to an existing agreement. Dave Inc., through its subsidiary Dave Operating LLC, has amended a program agreement with Coastal Community Bank. This agreement is all about how Dave partners with Coastal to offer its customers branded deposit accounts and cards. So it's about how Dave's services connect with actual banking products. Now for the nitty-gritty of the amendment. The big deal is that Coastal Community Bank will hold on to certain receivables related to this program for up to 60 days. Receivables are essentially money that people owe for services already provided. So even though Dave's customers are using the cards and accounts, the financial paperwork for that money will be handled by Coastal for a short period. After those 60 days, these receivables will be sold to Dave. Coastal isn't just holding this money for free. They'll be earning interest on any receivables that are on their books. This interest is tied to the Fed funds rate, plus an extra margin. This is pretty standard banking practice, but it means Dave will likely have to pay a bit more for this service depending on what interest rates are doing. Dave will also cover some operational costs that Coastal incurs because of this program. The effective date of this amendment was August 4th, just a couple of days before this report was filed on August 6th. This quick turnaround highlights how important they felt this change was. This section tells us that Dave Inc. released its financial results for the quarter ended June 30th on August 6th. So while the report we're looking at is about a change to an agreement, it also points us to their latest performance numbers. The actual financial results are being shared through a press release, which is attached as an exhibit. This is a common way for companies to distribute their earnings information to the public. When we look at that press release, we'll be able to see how Dave has been doing financially. They mentioned that the full details of this agreement amendment will be in their Form 10Q for the quarter ending September 30th. This means we'll get a more in-depth look at how this partnership change impacts their long-term financials later in the year. Signing off on this report is Kyle Beilman, who holds the important roles of Chief Financial Officer and Chief Operating Officer. Having one person in both those roles can sometimes mean a very hands-on approach to the company's operations and finances. Now let's talk about what this all means. The amendment to the program agreement with Coastal Community Bank seems aimed at refining their partnership. By having Coastal hold receivables for a short period, Dave might be smoothing out its cash flow, or perhaps offloading some immediate financial risk. The fact that Coastal earns interest and Dave covers costs tells us this isn't a free service. It's a financial arrangement where both parties have something to gain, but also to manage. The key takeaway here is that Dave is actively managing its banking partnerships to support its growth. They're making operational adjustments to their core business. As an emerging growth company, these kinds of strategic moves are crucial for building a solid foundation. We'll need to watch how these receivables are managed and what the actual costs are when those future 10Q reports come out to really get a strong sense of the financial impact. So what's my take on Dave Inc. based on this filing? They are proactively managing their financial partnerships and operations. This suggests a company that is focused on growth and efficiency. The move with Coastal Community Bank, while technical, is a step in how they are structuring their business to handle more volume and perhaps manage their balance sheet more advantageous. The main strength I see is their willingness to adapt their operational framework. The potential weakness lies in the details of those costs and interest rates, which are not fully laid out here. We need to see how favourable these terms truly are once more financial data is available. A key risk is how smoothly the transition of these receivables happens, and if there are any hidden fees or unexpected costs that emerge from this new structure. An opportunity is that if this streamlines their operations effectively, it could allow them to scale faster. In conclusion, Dave Inc. is making calculated moves to optimize its partnerships. This 8K filing is a signal of active management and a focus on refining their business model. Investors will want to keep a close eye on their subsequent financial reports to see the tangible effects of this agreement amendment. So what's your take on these financial maneuvers and what they mean for Dave's journey? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe to Corporate Decoder for more insights into companies' real financial stories. And don't forget to join our Discord community. It's a great place to talk about these things and get more insights. Thanks for watching, and I'll see you in the next video.